Hello, and welcome back to my channel. If you guys are visiting for the first time, I'm glad you're here. If you are returning and you coming back for more, I'm glad you're here too. Take the time right now and click the like button or subscribe to the channel. What we're going to do is take a little dive into the bookkeeping side of the trucking industry and just some information that you would want to know when you're setting up your books. When you're setting up your books, you will look closely at your assets and liabilities, okay? And equity, which concludes the balance sheet. The revenue expenses are going to go in your income statement. Okay, so I just created this little terminology, TTB, that stands for the trucker's bookkeeper, and it's called Tabikipedia, right? It's my own version, my own definitions of specific terms. We're going to look at the balance sheet and then tap over into the income statement. Okay. So again, when you're setting up your books, you will look closely at your assets, your liabilities, and your equity, which concludes the balance sheet. And then when you're looking at your revenue and expenses, that's going to go in your income statement. Okay. Easy enough, right? Cash is one of the main focuses when looking at the balance sheet. You want to know what you're bringing in. You want to look at your assets. You want to know what you have in your possession. What is that tangible item that you own, that you possess? Back in the day, people didn't put money inside of their bank, right? My grandmother, she used to put her money underneath her mattress. Honestly, when you think about it, how much money does your money make sitting in the bank? I mean, that's another topic. That's another topic for another day. But now, cash is represented in the bank account. If you're using some accounting software, it will be like cash on hand or the bank account, okay? So let's tap over here to the different methods that you use in accounting, right? So there's the accrual method or the cash method. The accrual method, when you're looking at accounting in general, right? So there are methods that GAAP tells us that we have to follow, and that's the accrual method. And so they divided the accounting into accrual method and the cash method. So we're going to go over those two methods. So starting from the beginning, in the beginning, there were two methods of accounting and bookkeeping called the accrual method and the cash method. Most of your small businesses are going to be set up as using the cash method, okay? The accrual method is different from the cash method in that it gives a more accurate picture of the business. It gives a more accurate picture of the business financial position. Think of the accrual method like your mother-in-law. It keeps tabs and report every single thing you do right and every single thing you do wrong. Okay. The biggest difference between the two are the timing of when transactions are recognized. Okay, so the cash method is recognized when it leaves your pockets. The cash method is very deceiving. It's like coming home to a sweet, cuddly puppy and walking into a closet and every single shoe has been chewed. Okay, the cash method is not a true a true representation of what is really going on, right? So cute little puppy looks all cute, but when you really get down into the bedroom or you get down into the room where he's like basically chewed out your shoe, in actuality, that's a true representation of what happens, right? And so that's why it's kind of deceiving because you can't really tell what's in your bank by using the cash method because it's not recognized until it actually leaves your pocket. All right. So let's talk about the load board. You may hear a lot of guys and gals talk about the load board. So we have some that are self-dispatch, which means that they book their own loads. And then you may have some that hire dispatchers, which means the hired dispatcher booked the loads for them. At any rate, If they don't have some sort of contract or certified business, so to speak, then they use a load board. And on this load board is just the online hosting of loads and with load and freight. And the brokers go on there and post their loads. And so the driver, the owner operator gets on there, or the dispatcher gets on there and book the load for the driver. Okay, so the load board is one of the main tools that carriers or owner operators use to book their loads. They log into the load board system or a database. It's kind of like a database. They select the load, call the broker to confirm the load. And then once that load is confirmed, then there is a such thing as a carrier packet, right? That's something we bookkeepers offer as a service. We offer the services of completing those carrier packets for those drivers who don't have the time or capability or really don't want to pull over and fill out those carrier packets. And so we step in and we handle that back office support. So generally what happens is the carrier packet is completed, right? And the load is booked, and then the broker sends the rate confirmation, kind of like an invoice, right? And then the carrier picks up the load. The rate confirmation has the carrier, the information to pick up and the drop off information. So the carrier knows where he or she is going, what items they're picking up, and then where they're going to drop off. And then after that, the rate confirmation also includes the rate amount. Okay, so what is the rate amount? Well, the carrier is not working for free, right? And so because they're not working for free, they're providing a service and they're getting paid for the services performed. The revenue that is generated from booking these loads or booking loads is ultimately an asset called cash. Right. So cash is a combination of the balances that's in your checking account, the balances that is in the savings account, the undeposited checks, right? The checks that you haven't even deposited yet, the petty cash, the currency. All of that is your cash, and that goes on your balance sheet statement. Okay. So once the driver has gotten to his destination, he's going to get the bill of lading, which shows what items are being loaded onto the truck, right? The number of items, the quantity of items, things of that such. And then there's that rate confirmation. So once you have that bill of lading, BOL, and that rate confirm, right? Rate confirmation short for rate confirmation. Once you have all that information in, and then you're ready to go with your factoring company, and you want to get paid within a matter of days, and you don't want to wait that net 30. That's why some use the factoring company. Okay, so so this is fun, right? So the guy's like, hey, here's my bill of lading. I have everything I need. And there's a tractor trailer. So a lot of these units don't have a trailer. A lot of the tractors are just what they call drop hook, where they're actually transporting the trailer with freight with a load inside of the trailer, and they're dropping that actual trailer off to the next location. Okay, and then those are just your power units, just the power unit itself. And then there's some tractors have trailers, and you see both the tractor trailer, like they own both the tractor and the trailer. Okay. All right. So that's an example right there of that. So the whole game, or the name of the game, is to get paid, right? They're doing this to generate income. They're serving our country. They're transporting goods and services, and the ultimate goal is to get money, receive income, record the cash. Where's the cash going? On the balance sheet. Why? Because it's an asset, right? That's the biggest thing. It's an asset. So once all of that information is submitted to the factoring company, boom, they're going to deposit cash into your account. That cash is going to go on a balance sheet. So you have lots of cash, right? We're claiming that thing. You're going to have lots of cash. And so assets are probable future economic benefits obtained or controlled by the trucking company as a result of transactions or events, right? So the transaction would be you going to book the load, you receive the income, boom, you're booking it into the balance sheet as cash because ultimately you receive cash for the services performed. It's an asset. Anything that has a economic value and can be owned or controlled to produce value is an asset, whether it be tangible or intangible. Ownership of any form of value, such as cash or money, is considered an asset. Think of a trucking company assets as a box of valuables, like that box you see there on the screen, that has been either purchased, loaned, or earned. Just a box of goods, right? Other examples of assets are, of course, your tractor, the equipment itself, large tools, large equipment, a rebuild of an engine, a rebuild, basically a rebuild, whatever increases the value of an asset, right? So the rebuild will increase the value of an asset, so it's an asset. All right, so all of your equipment, anything that you can think of that brings value to you, right? What about you, like as a person? What is your the thing that you accelerate most in? Maybe it's your personality. If it's your personality, then your personality is an asset. Think about another type of thing that brings value to you. Maybe you are a very kind person or a very easygoing person. That's an asset. That's an asset. You're an asset. And those are the things that brings a value to you. So same scenario. When you're looking at your business, what brings value? Well, if you don't have equipment, then you can't bring money. You can't generate income. There's no economic value there if you don't have your equipment because you can't run. If you don't have equipment, you can't run, you can't book loads. So an equipment would be an asset to you because it's a way that you're able to generate income. Does that make sense? Okay, good. So asset accounts are one of three major classifications of balance sheet accounts. Okay, so you have your assets, liabilities, and stockholders' equity. Some know that as owner's equity. With our focus on the asset account alone, keep in mind that an asset can be described as something that he or she owns. All right. Imagine that your company has several checking accounts. Okay. All of those checking accounts are usually separate general ledger accounts like check-ins and savings and tax savings. The balances of those checking accounts are combined into one total account called cash or cash equivalent. All right. Are you following along with me here? Let me just pause and say you guys are awesome. Okay. You guys are fantastic for listening. If you hadn't had a chance to hear my other videos, take the time out. You're looking for something specific. There's some videos out there. I've put out videos. We've talked about a lot of things. If you want me to discuss a particular subject, put the comment down below. I'll read it and I'll give you a presentation on it. I love doing this. If you're not a subscriber, go ahead and hit the subscribe button now. And if you want the other notifications, you want to be notified that I have another video out there that could help you, then hit the notification button down below. Okay, so in this example, I'm going to give you an example. And in this example, we're going to talk about basically your general ledger accounts, right? Another general ledger account, as you can see, is your accounts receivable. Your accounts receivable is basically the money that you're expecting to receive, right? So you bill out for an item for $2,500. If you're using a system behind the closed doors, like if you're using QuickBooks, Xerox, there's so many softwares out there now. Whatever you're using, if you're creating an invoice, you're going to debit your AR, credit your sales. Once that credit revenue, so boom, your balance sheet increases with cash, and boom, your income statement increases with the revenue. All right, and so that is your AR. Again, it's what you're expecting to come, and you're going to go ahead and record it. If you're using the accrual method, you're going to go ahead and record the AR, and that's how that works. So let's go back. The accounts receivable is a right to receive an amount as the result of the trucking company delivering goods and services on credit. Under the accrual method, as we mentioned before, AR is debited and sales is credited and so forth. Okay, so that's pretty much, like I said, if you're using an accounting system, I'm just going back over my thoughts, try to make sure I explain that correctly. If you use an accounting system, all of this is done in the background. So don't worry about making these journal entries, because if you're using an accounting system, is done for you. Okay. So let's talk about supplies and equipment and things like that. So I talk with a lot of people every single day, and everybody has their own unique setup. I talk to some companies, they're doing hotshot services only, right? I have some trucking companies who do work with dump trucks and box trucks. And then I have some that work with just Sprinter vans. And then I have some that's doing a 3500 Dodge with a 40-foot flatbed trailer. It just ranges because this industry is just so awesome. And there's money out there to be made. There's money to be had. There are a lot of different places, a lot of different types of equipment. But as I mentioned before, remember, your equipment is what brings you economic value. Your equipment is an asset. Again, that's going to go on your balance sheet. So whatever your equipment is, that's going to go on your balance sheet, whether you're leasing it, whether you own it, whether you're financing it. Your supply is the same thing. You want to keep up with all that stuff. And you guys, again, if I haven't mentioned before, make sure you check out the course I did. Check on the website, www.thetruckersbookkeeper.com. Go under courses, and I'll give you in that particular section, there are going to be courses for you if you're interested in taking those courses. We have a course already prepared for you, and if there's any interest, go on, check out the website, and you'll get more detailed information with way more valuable information. So let's talk about the electronic logging device, the ELD unit, right? So if your truck is a certain age, over the year 1999, you're required to have an ELD unit. So a lot of my clients, almost like 90% of my clients, use KeepTruckin. No joke. And that's not to say there are other softwares out there that are not great. There are other ELD units that are just as great, but like I said, 90% of my clients use KeepTruckin. And so this is a time you guys can use my link below. And if you have not registered for your ELD unit, you can get if you go with us, you can get a $200. If you use my link below, you can get up to $200 when you become a KeepTruckin customer. Okay, so you're definitely going to be discounted and rewarded if you use our link. Okay, so let's go to the next one. So here I'm just showing you basically most people know what a flatbed trailer looks like. They know what a power unit looks like. But there's some people out there who are new to all of this is new to them. And I really like, whenever I teach, I really like just going just from the very bottom and trying to talk in a way that everybody can understand, where I'm coming from. So again, the trucking company biggest asset is its equipment, right? And so these are things that, we as accountants, we as bookkeepers, we think about, okay, how are we going to get all of these transactions fed into our accounting system, okay? While you guys are out there on the road and you're, running the country, basically, we're out here trying to figure out how to connect your bank account to our accounting software. So everybody has their part to play. So here are your liability accounts. Again, we're still focusing on the balance sheet. And your liability accounts are going to focus on, if you bought that truck, you probably have a loans payable, right? Whether you're leasing, whether you're financing, or whether you own it. Well, if you own it, then you're probably not going to have those notes because you own it, right? So that means you have the title for it. But if you are financing or leasing, you're probably paying a note every single month. And so that's going to go under your loans payable. Liability accounts are probable future sacrifices of income or assets, right, arising from a present obligation to a particular entity. If liabilities are settled, they become transferred to assets, right? So when you've settled a debt that you owed for a piece of equipment, it's now your property. You now owe it, so it's now an asset. A liability is a duty or responsibility to another in return for some form of debt, such as a business loan, which would entail the settlement of that loan. When a trucker company purchases a truck or a trailer with a loan or some type of financing agreement, you now have an asset on the books and a liability. So there's that balance, right? You book your asset and then you have a liability. The factor amount is recorded as a liability on the books. Each time a load is factored, the factoring company purchases a receivable and advances the trucking company that amount. Right? The receivable remains open until the broker pays the factoring company. So that's another type of liability. If you're using a factoring company, technically you're not, even though you're receiving cash from that factoring company, the factoring company has not received its cash. So technically it's still a liability. Now, we can go deep about that, but we'll just keep moving. So if you report cash without showing that factor amount as a liability, you run the risk of overstating your cash, which overstates your balance sheet, right? Okay, so again, why are we in this? We're in this to earn income, to generate revenue, and so forth. And that was my battery running low. So let's wrap this up. Was that a sign? Was that a sign? Matter of fact, if you guys, I'm human. Let me find the charger. Okay, again, we're not doing this just to, for fun and games. We're actually doing this to create generational wealth for our families. We're doing this to a lot of people I've met. They're in the business and they also do real estate. I've met a lot of people, they're in the trucking business and they're still working full-time jobs. So everyone has their own journey and their own reason for working into this industry. And so ultimately, we're trying to make the income because we're trying to provide a better life for ourselves. In this industry, you're going to basically either get paid for the load, you either are going to get paid for detention pay, layover pay, or tonneau pay. And so all of that rolls up into your gross income. Your gross income is generated from, again, the services provided by the trucking company. If you're using accounting software, you may put the different income categories. You may name some, one category load, one category you may name detention pay. It doesn't matter because ultimately, it's how you want to see it, right? But ultimately, it rolls up into your gross income. The loads will be found on your rate confirmation. Your rate confirmation is always going to show you the amount, right? Your rate confirms. All right. So, and that's how that works. Again, if you have any questions, if you want to know, whatever you need to know, just leave your comments in the bottom of the comments, and I will make sure that I try to get to answer every single question that is possible to answer. I don't know everything, but I'll do my best to do the research and make sure that you're provided with valuable information. Again, my name is Reva Howard, and we are the Trucker's Bookkeeper. We provide back office support, Form 2290s, IFTA, quarterly IFTAs for our drivers. And we try to put out healthy content that's digestible and understandable. If you need to reach out to us, www.thetruckersbookkeeper.com. Again, if you need your ELD unit, don't hesitate to use our link. We got that link for you guys, and it will help you. The ELD unit is required for any equipment over year 1999. You're required to have an electronic login device. 90% of our clients use it. Feel free to use our link to use that. Again, subscribe to the channel if you like the content. Leave some comments, and I'll make sure I do my best to answer you as efficiently as possible. Thank you. Chat later.